Hello, this is Accounting Space, your learning platform for finance and accounting related issues. Today, I'm going to be reviewing accounting entries for disposal of asset, or you can call them fixed asset or property, plant and equipment in accordance with IAS 16. Now, first of all, we'll look at profit on disposal of asset. So typically, what does disposal of asset or disposal of property, plant and equipment mean? That is a situation where a running asset that is in the asset register of a company, the management of the company decides to sell it off, maybe due to one reason or the other best known to them. But the bottom line is a conclusion from the upper management has been reached to dispose of or sell off the asset to somebody on the inside or somebody on the outside. Now, what that typically means is when you want to sell something, you get monetary value for it. Now, there are times when you're selling off, an organization is selling off an asset, there are times when they make profit on selling off that asset or disposing of that asset. There are times when they make loss on disposing of that asset. Now, there are accounting entries that surrounds that scenario. Now, depending on the scenario where the item or the asset was sold less than the carrying amount, there are certain accounting entries you need to put in place. When a situation where you sell it above the carrying amount, there are accounting entries that you need to recognize accordingly in order not to disrupt the balances in the trial balance and in the asset that you have. Now, first of all, is we look at profit on disposal of asset. What that typically means is when you sell off an asset in the books of a company, that the selling price or the selling amount or the amount you sold it to a customer is higher than the carrying amount in the property, plant and equipment register. Now, what that means is, let's look at this case in point. Anjorin Limited sold one of their cars to a customer at 1 million naira on the 29th of August 2000. The carrying amount stood at 732,000 naira by 29th of August 2000, year 2000. Now, let us be very, very mindful of the date. These are very, very key things to note when you are dealing with disposal of assets. Now, original cost of the asset stood at 3.2 million naira. Accumulated depreciation at the point when the asset was sold was at 2,468,000 naira. You are required to show the accounting entry for this transaction. Like I said, carrying amount, we need to determine what's the carrying amount at the point when the item was sold. Now, the carrying amount, according to this scenario, the carrying amount stood at 732 naira, while the asset was sold for 1 million naira to the customer. So what will be the accounting entry? The accounting entry would be to debit accumulated depreciation account with 2.4 million naira, 2,468,000 naira, and debit bank because we received bank, we received 1 million naira into the bank account. Then credit profit on disposal of account. Now, what is the profit on disposal of account? That is the difference between 1 million naira that was sold and 732,000 naira as a carrying amount in the books. The difference between these two amounts is profit on disposal of asset, which is 268,000 naira. So you credit that on the profit on disposal of asset account, while you credit motor vehicle account with 3.2 million naira. Now, if you look at this, you see that automatically the debit side equals the credit side. So automatically it cancels out, and it's the carrying of the book, the value of the asset is taken out from the books and appropriately recorded in the bank account, and every other thing, the accumulated depreciation is also taken out from the asset register, so that the whatever transaction or whatever thing that pertains to that particular asset is taken out completely from the books of account. So you don't need to, on a monthly basis, start calculating depreciation again for this particular asset. That is how to treat profit on disposal of assets. Now, there are times when you sell less than the carrying amount. So let's look at the second scenario: loss on disposal of assets. Now, when Anjorin Limited sold one of their cars at 500,000 naira on the 29th of August 2000, the carrying amount stood at 732,000 naira, which is still the same scenario up by 29th of August 2000. Original cost of the asset was 3,200,000, 3.2 million naira. Accumulated depreciation stood for the asset was 2.4, 2,468,000 naira. Now, what will be the accounting entry for this transaction? You need to note that this transaction is different from the transaction we earlier reviewed. Now, what will be the accounting entry? We'll debit accumulated depreciation like we debited accumulated depreciation for the initial transaction. We'll debit bank because we received 5 million naira on the 29th of August in the books. Now, you need to also determine what is the difference between what we sold and the carrying amount of the asset in the asset register. Now, the carrying amount is 732,000, while the amount we sold it was 500,000 naira. So we made a loss on disposal of that asset to the tune of 232,000 naira. So you debit loss on disposal of asset account with 232,000 naira, and you credit the motor vehicles account with 3.2 million naira. Now, if you look at this accounting entry, the debit side, right, the total on the debit side equates the total on the credit side. So that way you're able to treat a loss on disposal of assets. I hope this is very clear. If you are having any challenge or you need further clarification, kindly send us an email. Would be happy to respond to you and give you clarity. Thank you.